Hi everyone, I'm Jason with Level Up Investing, and in this channel I like to talk about personal finance, financial news, relevant topics of today, as well as investment strategies. So in this video I'm going to go over two companies, Pfizer and Johnson & Johnson. And in my last video I talked about the coronavirus vaccine race, specifically the 5 front-runner companies that are working to develop a vaccine, and they're doing so in the fastest rate that we've ever seen a vaccine to be created. So in that video I talked about 3 specific companies that I was really interested in: Pfizer, Johnson & Johnson, and Moderna. In this video, I'm going to look at 2 of those, Pfizer and Johnson & Johnson. These two are really the behemoths. They're the giants in the pharmaceutical industry, and Johnson & Johnson, as you all know, is a big company all throughout the world when it comes to household products too. So a lot of power in these 2 companies. So I wanted to focus on them and really dive into the numbers of both of these companies, looking at where they are now and what the valuation is, and how wise I think it would be to invest in either of these companies right now. Okay, so let's get right into it. This is my intrinsic value calculator for, in this case, Johnson & Johnson. And the sources that I use for this data include, I use Yahoo Finance, Guru Focus, FinViz, Zacks, and Morningstar. So I use a number of different sources. I cross-reference the numbers. And in this video, instead of just walking through how I got those numbers, I just put it in this chart for you to review. So for Johnson & Johnson, you can see what I have here, the cash flow from operations for the trailing 12 months has come out to $20,735 million. And looking at multiple sources, looking at the growth rate estimates, I saw that the most conservative growth rate was 5.08%. This was based on earnings per share. Did that for the first 1 to 5 years. I extrapolated that to the following 6 to 10 years as I think a pretty conservative measure. Looking at the beta numbers from these multiple sites, I determined based on this little chart here that both of these companies, Johnson & Johnson and Pfizer, have very low beta, meaning that they are companies that their volatility is very low compared to a lot of these other companies right now, which makes sense because these companies have been around. These 2 companies have been around a really long time, and they're really mainstays in the market. So for both of them, the beta was really low. Less than 0.80, so it translated to a discount rate of 5%. So you see that here. And I have the shares outstanding of, 2,633,000,000 shares. And from the balance sheet, the quarterly balance sheet for the most recent quarter, I got the cash and short-term investments for JNJ of 19,140,000,000, and the current portion of long-term debt as well as the short-term debt came out to 5,330,000,000. So as you can see, a very, very good balance sheet. So when I plug those numbers in using this discounted cash flow method, you can see the projected cash flow over the next 10 years with the associated discount rate. And that leads to the present value of cash flow, giving me this number, over $208 billion over the next 10 years. And when I divide that by the number of shares, initial intrinsic value of $79.08. When I take into account the cash and short-term investments, as well as the current portion of long-term debt and the short-term debt, it gives me a final intrinsic value per share of $84.33. So the current stock price as of today, 7/31/2020, the current stock price is $145.76 for Johnson & Johnson, ticker symbol JNJ. So currently Johnson & Johnson, based on my calculation, is selling at a premium of 73%, 73. So quite expensive, quite overvalued at this point. So let's take a look at Pfizer in comparison. Okay, so here we are with Pfizer. The Pfizer numbers using the same data sources as I did for getting the J&J numbers. Cash flow for the trailing 12 months of little over 14 billion. Growth rate of 4.25% from multiple sources. Again, the most conservative. I took the highest beta, and again, it gave me the lowest discount rate of 5%, and with shares outstanding of 5,555,000,000. So again, using the balance sheet for the most recent quarter, Pfizer has over $10 billion in cash and short-term investments, but also approximately $16 billion in short-term and current portion of long-term debt. So balance sheet not as strong. So let me take the Johnson & Johnson, bring that back in here, and you can there you go. You can compare the numbers here. The difference in cash flow, difference in growth rate per analyst reports, same discount rate. And you can see the difference in the basic difference of the balance sheet. Again, of course, this is not all inclusive of the balance sheet. Just two key numbers. So taking that for Pfizer, I plug that into the formula here, and ticker symbol PFE, and it gave me intrinsic value of $24.27 per share, taking into account, again, the cash and short-term investment, and then I also take into account the current debt. So for Pfizer, the final intrinsic value per share came out to $23.26. So the current stock price for Pfizer is $38.48, and that gives me a premium. The current price is a premium of 65%. So again, comparing that to Johnson & Johnson, that had a premium of 73%. So both companies overvalued, but you can see, based on my numbers at least, Johnson & Johnson is slightly more overvalued than Pfizer here. So this is going to be very interesting. Because I'm looking to invest in both, get more shares in both of these companies, and it is a little tricky though, because these aren't exactly the types of companies that are selling at a value right now. But nonetheless, my primary objective is to look at the companies, look at the foundation of the company, and if it is a good company, whether it is a quote unquote value stock or a growth stock, whatever you want to call it. I like to just take into account that I'm looking to invest in the company itself, whether the shares are currently overvalued or not. So what's interesting about these two, the reason why I'm looking at them, even though they're both at a high price compared to intrinsic value, is that they are both heavily involved in the coronavirus vaccine trials. And so that really can tip that scale towards buying. So I'm going to be looking at both of these, watching their prices very closely, and I'm going to be going ahead and making an investment, just like I mentioned in the last video, making investment in both because I know it's going to be a good investment over the long term. So tell me what you think. Leave a comment. Let me know about what your thoughts are on these companies and the valuation that I just did. Let me know what you think about the intrinsic value that I came up with, and do you agree with them? And if you like this content, definitely give a like to the video and subscribe and hit that notification bell so you can get more videos like this. So I will see you on the next video.